Hi there, my name's Matt Gorn from SRVO Property Limited. I'm a chartered surveyor and RCS registered valuer, and I'm here today to talk to you about building reinstatement cost assessments. This is the agenda for the day. We're going to talk about what are building reinstatement cost assessments, or BRCAs as we call them, also known as BRVs. So there's lots of different initials and acronyms for them, but they all are the same thing. Why are these important? We're going to run through examples of what an overinsured property looks like and how that can come about. We'll also talk about underinsurance and go through a worked example of the averaging clause. We'll then talk about how these assessments are done, as well as what information we need from you, and a brief touch on our fee scale to finish up. So what are building reinstatement cost assessments? Well, they're an assessment of the total amount it would cost to rebuild that property in the event that it was completely destroyed. Insurers are interested in that amount because it represents the worst case scenario and the amount that they would have to pay out should that property be destroyed completely. So it gives them the constraints that they're willing to provide assurances on. As part of the assessment, we include obviously the construction of the building, but also professional fees, demolition costs, and any other specific site-related fees. The RSS advised that these are assessed annually and reviewed annually, but also main and full reassessments are carried out every 3 years. We carry out assessments of various types of property, including residential, commercial, and mixed-use blocks. And we do so across the country in different markets and areas where buildings have different features and elements to them. We factor in all those different elements, including sort of listed buildings and properties situated in higher value areas which have better internal fit outs, etc. And we use construction cost data from the BCIS to establish the appropriate rates to use, which are not only based on appropriate locations, but also on appropriate dates. This allows us to produce accurate reports, which can give our clients confidence going forward that their property is insured at the right level. But why are these assessments important? Well, they do ensure that the correct level of insurance is in place, as I've previously touched upon. They reduce the risk of under or over insurance, and they support better financial planning for clients and property managers on a year-to-year basis. We also provide reliable valuations backed by surveyors' professional indemnity insurance, and in our case, this covers up to £10 million on an each and every claim basis. So we are also able to offer, once we've assessed a property once, we're able to carry out a desktop assessment on the proviso that no alterations have been carried out since our previous inspection of the site, and this can often be done at reduced fees, which saves a little bit of money for the client and also gives them the compliance that they need going forward in terms of placing the insurance at the right level and having the backing of our professional indemnity insurance in place. So where might you be overinsured, and what might be the causes of that? So being overinsured is obviously a bad place to be, because obviously you can inflate your premiums payable by the client, which no one wants to do, and it can lead to unnecessary costs for them. So this can and has in the past come about because people misunderstand what the declared value is supposed to represent. And in past cases, we've had instances where the market valuation of the flat, so what it would sell for in the market, is used rather than how much it would cost to rebuild the property. This can obviously lead to an inflation in that declared value, which would result in overinsurance. For underinsurance, this is a real risk and poses a real problem to both your clients and you as property managers, because obviously if you're not insured at the correct level, there's jeopardy involved in that the payout in the event of a claim could be reduced, and insurers rely on the averaging clause to sort of establish what that cost, that payout should be in the event that is the case. It creates potential financial deficits if that were to happen, and it's recommended that regular reassessments are carried out to maintain accurate cover. Here we run through an example of how the averaging clause can work in practice, and it's a bit of a cautionary tale. At the top there, you've got the formula that insurers use where they suspect averaging needs to apply. So it's a pretty basic formula, but one that's very important to understand. And I've got a worked example here where we can look at exactly the practical implications were this to apply to a property. So in this case, we got a declared value on the insurance policy at the event of a claim of £2 million. And that would probably, we're talking about a not particularly large site here. It might be sort of between 20 and 30 units in practice. But what happens is that a total loss occurs. The property is destroyed by one means or another. It could be any means, fire, all that sort of stuff. And the insurer is notified, and they send out a loss adjuster to go and assess the claim. The loss adjuster reports back and states that, in their opinion, that the property might be underinsured. They then appoint a valuer to go out and do an independent reinstatement cost assessment. And in this case, it's come back and said, actually, this should have been insured at £4 million. So in this instance, we have a real problem because they then look at that and see that in effect, the property was about 50% underinsured at the time of loss. And they use that formula at the top to establish what their payout, what their element of the payout should be. And if you work it through, in actual case, in this one, the payout that they'll give is actually £1 million. And you might think, well, actually, no, it's 50%. The property is worth £4 million in reinstatement cost. Shouldn't it be 2 million? Well, actually, the formula there is stating what they've insured the property as, and the percentage it is underinsured, and they're only willing to pay out 50% of what they've placed the insurance at the time. So it's 50% of the 2 million, which is £1 million. And that obviously leaves a huge deficit of £3 million, which would need to be covered elsewhere, whether that's, the freeholder, whether it's the fault of the managing agent, or indeed the leaseholders. That would be something to decide, and very much dependent on what advice was given, what the history of this was, and whether it was assessed recently. It could be an error by the surveyor, in which case fingers would be pointed in their direction. But it's worth noting that most insurers won't pursue an averaging claim if the property has been assessed by a chartered surveyor within the last 3 years. So how are these assessed? Usually if we don't know about this property before, we haven't carried out an inspection, we would do a site inspection. We'd measure the property up and calculate the floor areas. We'd record building age, construction types, layouts, the services that are available on site, and any other external features and on the grounds and estate as a whole. We'd then look at cost data on the reinstatement cost assessment from the BCIS, Building Cost Information Service, and we would prepare a bespoke report using the calculations that we have derived from the BCIS and our floor measurements from on site. What information we need from you? So in terms of information that we need, at the outset, we'd obviously need the property address. If you have any useful plans, that would be really helpful. A bit of information on the building age and construction type, and any other amenities and elements of the building that need to be assessed, such as garages and other parts of the estate. We'd also look at any special site features, and whether we need to split costs in terms of block by block to reflect service charge schedules. We can do that as well. If you give us the sort of breakdown of what you want, we're more than happy to accord with that. So instructions can be submitted through Dwellants, or we do take instructions via email and inquiries that way as well. So we're quite flexible. and that we aim to respond within 3 working days. To finish up, we're going to talk about our fee scale. Here's an example of this. I would caveat in this case that this is for a basic block of flats, purpose built, doesn't include commercial units, no basement car parks, isn't a listed building, and doesn't exceed 6 stories in height. It's also not a house conversion, and it's not positioned within prime central London. So we're talking about, modern purpose-built blocks. This is our general fee scale, and if you do require us to send you through a quote, we're more than happy to do so. So please do reach out. It's been a pleasure to run through this with you today, and if you do have any further questions, please do reach out and let us know. Many thanks.